Let's talk about CLOV. Hello and welcome back to another video. I'm your beautiful host, Young Buffett, and in today's video, we're going to talk about what's going on with CLOV, what our plan is, what I did on Friday, what people are talking about, what the dark pool data is showing, and we'll come up with a plan for the next week. So if you haven't already, scroll down, find my Finery link. You thought I was going to say make sure you're subscribed. Do that too. But Finery is like Discord, but for investing. We're live here pretty much Monday through Friday. All hours of the day, there's someone here talking about stocks, crypto, investing, money. If you just need someone to talk to, you know where to go. Next, we like to take a look at APE Wisdom. What are people talking about? We got Wall Street Bets, Wall Street Bets New, Wall Street Bets Elite, stock market, investing, SPACs, options, and day trading subreddits that we're tracking here. Number one on the list, SPY has been taken off number one. They've been literally number one forever now. But GameStop, everybody's talking about GameStop. Let's hop in there really quick. 61% positive public sentiment. Looks like comment volume is rising, but we'll take a look at that in a little bit. Then we got SPY, still a lot of global economics going on. Keep an eye out on China this week and for the next 30 days. Let's see how Evergrande handles their situation. Next up, we have Smile Direct Club. They're working their way down. I don't really care about them. Tesla has been doing well. AMC is working on it. Alibaba, a lot of China drama. Then we got Go EV, a lot of EV news coming out. So keep an eye out on the EV market as well. Then we have Apple and then CLOV. Honorable mention for Facebook for finally making this list as well. They've been having some drama with Apple on their policies, on their ad policies and privacy policies. So keep an eye out on that too. Social media stocks are very, very interesting. But CLOV overall public positive sentiment is about 54%. That is on the lower side. We're typically anywhere from 60 to 70 to 80% positive public sentiment. Nearby words include still, don't, AMC, GME, like, MVST, next, question, OCGN, MMAT, pump, buy, before, Tantalus, okay, and then plump. So in general, people are talking about CLOV. There has been some sort of FUD or negative articles or people talking bad about the stock, but they're just talking bad about the stock. So don't worry, it happens. Just by the way, the more we make scary headlines, like I kind of want to make the title of this video, CLOV going to zero. The more we make scary headlines, the more people click on it, and then the more content creators get paid. So the same goes for people who write articles and analysts and stuff like that. They want your clicks and they want your attention. So it makes sense why there's a lot of negative articles coming out. It makes sense why people like to stir the pot a little bit and create that scary environment, because everybody gets paid more. So just have confidence in your investment if you are confident on your investment. I always say keep it small, keep it safe, and keep it fun. That way, up or down, you're totally fine. But I just thought I had to let you guys know, just in case you needed that reminder. How did we end up here? Hold on. Real-time sentiment, ticker sentiment. There we go. So Tesla, Go EV, Wish, Body, GME, Facebook, then CLOV. So this is Wall Street Bets ticker sentiment. This is what Wall Street Bets is talking about. It gives us a cool little chart of what moves and what affects what. So last week or so, about 2 weeks ago, we saw comment volume skyrocket after the price of the stock skyrocketed, or vice versa. It kind of shifts around a little bit, I'd noticed. But anyways, it looks like comment volume is starting to pick up a little bit, and it does seem to look a little negative, as you can see by the red. But anyways, let's see what happens to the stock price this week. Another thing I like to take a look at is the max pain. So the max pain for next week currently, this might change on Monday, we'll keep track on it, but currently is $8 a share. If you don't know what max pain is, it's the price that the stock needs to be at for market makers to cause the most amount of damage financially to the calls and the puts. So keep an eye out on that. With a stock that's so controlled and so heavily manipulated, it's very interesting to see how the stock price moves in conjunction to max pain. So I like to keep an eye out on that. It's very, very interesting. What else is very, very interesting is dark pool data. I haven't seen that in a long time. Dark pool data, net short volume is positive. So in the dark pools, they're not shorting it as much as they were. If you remember last week on Monday or so, the net short volume was negative 3 million. And then it became negative 2 million. And then it became negative 1 million. So the short pressure was releasing a little bit. The stock price didn't really react. It kind of just hung out in the same range. But then now it's 1.1 million. So that's about a 4 million volume swing or change in the positive direction. So we'll see. We'll keep an eye out on this. We'll see if shorts start to pile back in or not. We'll see if the stock price starts to move up or not. But it's very interesting to see what's going to happen here. Net short volume in dollars is oh, I'm so used to saying negative. Net short volume in dollars is positive 9.1 million. So let's see. Let's just see what happens. I have nothing much to add there. But you know what I do have to add? I bought 100 shares of CLOV. So I was looking at the puts very, very carefully this week, and I really, really wanted to sell puts and collect that premium. And I was totally even okay with buying CLOV if my put got assigned, but the put premium wasn't juicy enough. I would get paid like $5 or $16. It wasn't attractive to me. So I just bought the shares instead. I bought 100 shares at $7.70. I have not bought CLOV in a very, very long time. So if you look here, if we just do a quick little recap of how I've been buying, I bought 100 at $13.80, and then the stock just started to die after that. I'm sorry for buying it. And then I bought 100 more. I wanted to average down. That was part of my strategy. I didn't want to spend all of my money in the get-go, and I'm very happy I didn't do that because I would have been stuck at $13.80 cost basis. So I averaged down at $10.15. I averaged down even more at $9. At $9, I bought 50 more at $8.20. The weird numbers, the 5 and the 3 shares that I bought over here, I bought those because I sold puts, and I used the premium from that to buy shares. So they're pretty much free shares funded by whoever bought the puts from me. But anyways, I bought 50 more at $8.90. I bought 1 more because, again, I sold puts and I had enough premium to buy a free share at $8.51. And then during this consolidation period over here, I didn't touch it at all. I was just keeping my eye out on the premium, and I just wanted to see how it develops. Then they had their earnings, kind of popped up a little bit, came right back down, consolidated, and now I bought more at $7.70. Why did I buy more? Because this stock is either going to keep consolidating or go up from here. I cannot see how can CLOV, I can't even say the words out loud. 5, 6, 4? No way. There's no way that I just don't see it. Honestly, it's very possible now that I said that, but I just don't see further downside on this. So I called it out on my Finery page. A few other people also joined in and bought when I bought, but I'm very curious to see how it'll move from here. That brought our cost basis down to about $10.03. So that's not too outlandish here. Just a couple weeks ago, CLOV did hit above 11. So we'll see how that plays out. I'm very, very curious. Also, another strategy that I might dabble in now, maybe now that we bought 100 shares at $7.70, I might just start selling weekly calls above $7.70 and just one, because my cost basis for these 100 shares are $7.70. I can sell the 8, the 8.5, the 9, and still be at a profit either way. So just a quick example of what that looks like. Let me jump over to October 15th. So for the October 15th $8 call, you would get paid about $45 to sell an $8 call. And if you're unfamiliar with what that means is, I have 100 shares of CLOV that I bought for $7.70. I can promise to sell 100 shares of CLOV at $8 a share. And in order for me to promise that, I get paid $45. If CLOV goes above $8, then I have to sell my 100 shares at $8. But that's okay, isn't it? Because I bought CLOV at $7.70. But, and a big but, if CLOV does not expire above $8, I get to keep $45. And that's it. I just walk away with $45 and the 100 shares that I have at $7.70. So it's a win-win situation, isn't it? Unless CLOV just goes insane and then it goes to like 20, then I really missed out, didn't I? Because I had to sell 100 shares at $8. Something you could technically do is roll over that call to the next week or the next month or something like that and just restart that whole process. But I do have 309 other shares working for me. So my whole purpose of buying these 100 shares here are so I can play around with covered calls above my cost basis. And I'm going to pretend like my cost basis is $7.70 because I'm only doing one contract at a time. I hope that makes sense. I just said a lot there. If you're interested in learning more, either leave a comment down below or jump over to Finery. I'm more than happy to talk about it. If you have any questions, this is your safe space. I love you. You love me. We're a big, happy family. And with that, I'll catch you on the next video.